So in this video, we're going to talk about risk management. Let's jump over to MT5. And one of the things about risk management is we want to minimize the amount of loss and maximize the amount of gain. And so you see in the Euro USD trade that we're in, that price came down. We entered here, price came down to support, which was old resistance, turned support, and we should have exited the trade right here. We didn't. We let the trade run, and now the trade is going against us and it's coming back up to our entry. So once it gets to our entry, we'll be back at zero, but if it keeps going, we're going to be negative that amount once it goes past our entry. And so we can see down here we were right around $7,000 in profit. We're currently at $2,000, just a little over $2,000 in profit. So what we want to do is minimize the loss that we're going to take, and we can do that two ways. We can either close out the trade now. So to do that, just hover over next to the X by the profit, and once you click that X, it'll close out the trade. And you can close out the trade at any time. You don't have to wait for it to hit a stop loss or take profit. You can come down here and close out the trade. But what we're going to do is we're going to move our stop loss in profit. And so to do that, we're just going to simply left click on the stop loss, and we're going to drag it down to in profit. And we're just going to pull it just above where these last highs is. So the minimum that if price does come back towards our entry this way, then we would make $1,140. So if it turns and starts going back down, we're great, and then we can just keep moving our stop loss to follow price back down to our take profit of $7,200. But if price keeps going up, we can minimize the amount that we lose by letting it hit our stop loss, which is in profit. And you want to move your stop loss in profit whenever you can. So if you're in the trade, if we are in the trade here and it went down, we would immediately move it to break even or to move it to slightly in profit. And so that minimizes the amount that you have at risk. This would have been a risk-free trade, right? So right now it's a risk-free trade. We'll make about $1,000 if it comes up against us. And that's the way we're able to control our risk. But let's go to the video and let's dive into risk management a little bit more. So from a risk standpoint, risk is the what makes you profitable or not profitable. You can have the right technical analysis, but have the wrong risk. A lot of people starting off, they will lose more than they gain. So they may lose $1,000 and make $100. That's a bad risk reward. All right. So when we look at risk management, we got to think about risk reward. All right. The first thing with risk is that we always got to use a stop loss. We call it SL or TP. SL is stop loss. TP is take profit. So we always got to use a stop loss. We always got to use a SL, right? That SL should represent at minimum a 2-to-1 risk reward, right? And so if we go back to our trade, we can see that this is a 2 to 1.14 risk reward right now. So we're going to, if I pull this down, let's say I try to go like this, that's a 1, we got a 1-to-1 risk reward. That's a 1-to-1 risk reward. You're going to end up losing like that based on your win. If you don't have a large win streak, you're going to lose on this. You want a minimum of 1 to 2. So when we do this, you have to see if the risk makes sense. So let's say that we entered the trade
This was structure right here. We wanted to be above this structure, and price was already moving. And we was like, oh man, price is moving. I want to just get in. And so we get in way down here. What we've done now is increased our risk and messed up our risk reward ratio. So now we're operating at a 1-to-1 just because we wanted to get into the trade. And so it's better to just wait for the trade to hit your entry. If we look at the gold trade, that is, well, we got to make it a 1-2. It's 1-2. It's right above the structure right here. If it does break and go against us, it'll be above the structure. But let's say that we want to take it here, and we know structure's right here. What that does is we just move to a negative risk reward, where the reward doesn't match the risk at all. And that's a recipe for losing money in the long run. All right. And so risk reward is going to be key. It's going to be important that you maintain at least a 2-to-1 risk reward on all of your trade ideas. And the way that I do it is I look for where my take profit is going to be, and then I adjust my risk reward. So I'll drop this, move my take profit to wherever it's going to be, and then I'll move my risk reward to at least a 2-to-1 minimum. And so as soon as I get the 2-to-1 that I'm looking for, I see what that does. I look left and say, is that enough to get me over structure? And if it isn't, then I won't take the trade. But if it is, then I'll take the trade. All right. Now let's talk about how much we risk. Usually, especially on funded accounts, we can't lose more than 5% in a day and 10% total. So I don't risk more than 1%. Usually, it depends on the setup. If it's an A+ setup, then I may risk a little more. I may risk 2%, but usually it's around 1%. If it's a B or a C type setup, it's 1%, which means the target has to be double. So I risk 1% to gain 2%, or risk 2% to gain 4%. So you want the minimum of 1-to-2, and normally our trades will go 1-to-3, 1-to-4. On the trade idea we have right now with USD ZAR, that's like a 1-to-5 right now, or we risk a little to gain a lot. And then once you have the trade idea, and the trade idea is minimum 2-to-1, once you enter the trade, you just let it run. Because the reason why you let it run is because if you exit too early, you mess up your risk to reward. And that's how people lose 1,000 and gain 100, because they go into profit. They say, "Oh, I just want that. I just want what I want to make some money." So they take it out early, get $100. The next trade, they let it run and lose 1,000. All right. So I would rather lose the 1,000 than to make 100. Why? Because it's the risk to reward. And the probabilities of 1-to-2 means that I would have to lose at least 50% to break even. So out of 10 trades, I would lose 5 and break even if I trade 1-to-2. If I trade 1-to-3, I can lose 7 and break even. Right. And so that preserves my capital by controlling the risk. You'll learn that as time goes on. But if you become a machine with that and let your trades run, let the trade ideas run and let it hit your stop loss, you will find that over time you'll be more profitable versus exiting your trades too early. All right. So Mia had mentioned our green, yellow, red scenarios, and what she was referring to was our how we call signals. And so when we look at an A plus trade, we take it through a go, no go scenario. And we just ask a series of questions. These questions are going to become second nature. You're just going to see them. And so with A plus trades, those are usually trade ideas that go with the trend. And the stop loss is short. So 15 pip max stop loss means that I don't have to risk a lot for my stop loss. That we're at structure, a little bit below structure is all I have to do to move the stop loss. And then does the stop loss allow me to move, or is there a momentum in the market that allows me to move my stop loss to break even right away? So the market moves on open. There are several opens in the Forex market. And so if you look at this from a session standpoint, we trade sessions. So this is what we're currently in Asian session. And so you can see that there's not a lot of volume in the market. There's not a lot of stuff moving. And that's because we're in the Asian session. During the Asian session, market does move, but it's just not moving with momentum. There's not a lot of momentum in the market. This is at 1 a.m. Eastern, 2 a.m. Central Time, the London market opens. And we start getting a spike in volume. The market starts moving in that volume, and we get momentum. At 8:30 in the morning Central, the 9:30 Eastern, the New York market opens. And that's when majority of the volume comes into play. And so with that, when we look at the momentum in the market, our A plus trade says that we can enter a trade and it immediately, we can move it to break even because price has now pushed up in our direction. And so let me show you an example of this just so it makes sense. I think I had one on USD CAD. No. Let me go ahead. Which one was it? USD CAD. Is that it? All right, so let's look at USD CAD. So let's say we entered in right here. And right when we entered, price shot up and moved 43 pips into profit. So that allows us to immediately move our stop loss to break even. So it's a risk-free trade now. And so now it'll dance around all this way, but then it'll start heading up in our direction. Now, if it comes up against us, we break even. So what we're looking for on an A plus, does it allow us to do that early? And then does the trade allow for a heavy lot size where we can risk heavy without risking a large part of our account size? And then if it's a counter trend trade, do we have 30 pips of free running room before we encounter resistance? And so just as the trade is working for us here, there's also things that will work against us. So for instance, this 50 MA that's standing right here could be acting as resistance. And so is there at least 30 pips of running room before we encounter resistance? And that 50 is up about 70, 80 pips away. So yes, we do have running room. It's with the trend, and we do have running room where we can make profit before resistance hits us and we start going backwards. I think this one's rejecting off the 1 hour. or a lower time frame. Yeah, the 2-hour 50, starting to reject off of. But still, do we have enough running room before we start running into resistance? And then does it allow at least 100 pips of potential profit? And can we at least get a 1 to 2 risk reward? If yes, then it's an A+ trade, and we can risk a lot on this one. But if not, then we go to the B. We go to see if it's a B. And a B says, does the trade allow for a max of 40 pips for a stop loss? So we would have an extended stop loss. And on some pairs that count pips differently, you got to pull down a big stop loss. So let me show you that just real quickly. On USD CAD, I have a 51 pip stop loss. 40 would be right here, which I could get away with a 40. So that would be fine. Now let's go to something like Euro NZD. A 40 is not going to work because 40, to pull below this structure, I have to be at least 60, 70. So 40 wouldn't work. That would still put me in harm's way. Right? And that's what that's meaning. Or I could leave it at 40 and just take the entry a lot lower if it comes down there. Right? And so that's what we're talking about for a B. Has to be at least 40% stop loss. Does the trade allow for 1.5% risk for stop loss? Is there a minimum of 30 pips free running room, and does it have a 1 to 2? So that would be a B+. And then a C, if it's a B, then we just trade it as a B. A C is a red. So a C is an extended stop loss, at least a max of 70 pips. We have lower risk, so we're risking about 0.5%, 20 pips of free running room, and still a 1 to 2. That would be a C. And we really don't like taking C's. Every now and then we'll take a C, but we really don't like it. We really don't like taking B's, but we'll take a B+. We really like A's, just looking for A-type setups. And if we take us, if it doesn't meet any of these criteria, we don't take the trade. So now your success depends on you having the ability to say no to the wrong trade. And there's some traders that never find a bad trade. Every trade looks good. So, when you take every trade, a, a B, a C, like, I found a shark fin. Oh, I found this, I found that. And not evaluating whether it's an A, B, or C, you run the risk of blowing your account. Okay. Does everybody understand this?
Yes.
All right.
Yeah.
Yeah.
So what you'll see on our morning calls is we will go through all of these pairs, the majors, and then we also go through metals, and then we go through indices. What we do is we'll mark, when we evaluate it, we'll mark it as a red, yellow, or green. So let's say I mark this as a green, and this one as a yellow, and this one as a red. All right, what we'll do is we'll pull up the greens and the yellows, we'll pull those up into pending trade ideas. And that will be our watch list for the day. And so what you'll see, I'm going to take you over to Discord. And what you'll see in Discord is in our community, every morning, we'll post the pending trade. So you'll see pending trades every morning. You'll see those pending trades. And it'll just be the yellows and the greens. I think I pulled up red just because they were, if they would have hit a certain level, they would have turned yellow or green. But the greens, what you can see is very rare that we have green trades. I think we had a green trade on US 30 a while back ago. But greens very rarely show up. Blues are swing trades. We have swingers in that group, so those are more swing trades. But we post those every morning based on that concept. on risk, in the group. And then what we do in the group is when it meets our level, we'll do an analysis. And so I'll post an analysis where it'll say Euro USD a buy. Here's the entry, here's the stop loss, here's the take profit, and these are the confluences. It's rejecting off of the 12 and 15 hour 800 MA, has multiple high time frame regular divergence. It's waiting for the 4-hour open shark fin, potential 1-hour shark fin divergence. And we have Bollinger Bands, and this is what's working against the trade. So we always identify what's working against the trade as well. And then we'll post the idea. And you can evaluate that and see if you want to enter it into that idea. But under the trade analysis, we only post the idea for you to evaluate. We then post signals when it becomes validated, and we take the signals. So the signal says that the idea is validated, and we should probably get in on the signal. All right, and so that's the way that the community works. We have an automated shark fin bot that automatically detects when the shark fins happen. But when you come into this community, you'll come in, we'll see the welcome, and then you see everybody welcoming Sherry right now in the community. Do you pronounce it Sherry or Cherie?
Sherry.
Okay. I'm saying it right there. Okay.
Yeah.
So you see everybody welcoming Sherry in the group right now. What you also will see is education side of the group where we'll have the shark fin information explained. There's videos in there, there's settings, the trade idea criteria is there, how to set up your MAs, all that's there, how to enter exit trades, and different things in there. But most of the time we're chatting in the community chat. So you'll get the invite to come in there. In the morning, what you'll see is a live schedule posted of what's going on in the week. And then you'll see the Zoom link for our morning calls. You'll just go to the schedule and jump on the morning call. And then every morning call, if you're not able to make it, is recorded. So we could just call it charting time, where we have our prayer and devotion, and then we have the charting time. All of those are recorded after the call. So we have hundreds of video of our morning calls that you can go back and listen to there within the community. And so that's how we trade, and that's how we manage the yellow, red, green type setups. Jacob asks, how long are the morning sessions? So usually they start at 6. Usually we're done with it in about an hour and a half.
Mhm.
Sometimes 2 hours, depending on how long they go. And so prayer and devotion is usually about a half hour. Then we go into charting, and we go through all of the pairs that we evaluate. And once those pairs are done, we create the watch list, put it into the community, and then we chat through the community throughout the day. And if something comes up, we're yelling and say, hey, this is coming up. I think today it was oil that was moving on today. Yeah. Dustin said the oil went to fill the gap, and we've been discussing that. But yeah, so we just chat within the community based on that. There was one other thing I wanted to cover before we jump off. But let me stop right there. Because this is the basis. Oh, that's what I wanted to do. That's what I wanted to do. That's the last thing I want to do. Then we can jump off. want to do this. Because this is going to be an important part for you to get. All right, so let's do this. On risk reward, I need you to see this. All right, so we're going to play a quick game here. Because I need you to see this. All right, and drive home a 1 to 2. And hold on 1 second. Let me see. All right, yeah, I'll do it like this. Looking for, yeah, I'll do it with this. All right, so we're going to do it like this. We're going to do a game real quick so that everybody I can drive this. And this is an important game. So as a group, just shout out heads or tails. If you're right, we're just going to play this random game. If you're right, it's a win. If you're wrong, it's a loss. And I'm flipping a coin right now. So I just flipped a coin. Is it heads or tails?
Tails.
Heads.
Tails.
Tails.
Heads.
Tails.
Tails. All right, let's go. All right, you said tails. That's the first one I hear is the first one I'll go with. So tails. So this is you win, you get $200. All right, I'm gonna flip again. What is it?
Heads.
Yep.
All right, heads. It is tails. So you're gonna lose 100. All right. Hold on. Just drop it. There it is. All right. All right. What is it?
Tails.
It is heads.
Oh, for heads.
All right. Do this one more time. What is it?
Head.
Heads.
It is tails. All right. Do it one more time. What is it?
Head.
Heads.
It is tails again. All right.
Big.
Do it one more time. What is it?
Heads.
Heads.
It is tails again. Wow.
Head.
Gracious, we're at max drawdown, right?
All right.
It's
What is
it's
it?
tails on both. It's tails on both sides.
Two-headed coin.
Nope. It is. It's all right. Okay. I just did it. What is it?
Head.
Tails.
Oh, I heard heads first, so
Yes.
I'm gonna do that. It is tails.
You lost again.
All right. I got it again. What is it?
Heads.
It is heads.
Thank the Lord.
All right. Do this one more time. What is it?
Heads. Heads.
All right. And last one. What is it?
Tails.
Tails.
Got that one wrong. All right.
Man.
So on when you look at this, you've gotten 1, 2, 3, 4, 5, 6, 7 wrong and 3 right.
Mm-hmm.
And and you're down $100.
Mm-hmm.
Right? And so even at a 1 to 2 risk reward, even if you would have gotten 6 right, you would have been positive.
Mm-hmm.
So even if I just did 6 right, you would have been 200 up. off of 6-4. So you've been 40% right, and you would have been positive. And then at 30% right, you're negative. Right. And that's what I want to hit on a home on why we say 1 to 2 risk reward is because you don't really have to be that good to make money. If you can be disciplined on a 1 to 2, let it hit your stop loss. Just get better at analyzing, because you can lose a bunch and then just hit 1 to 2 and 3 more, and you would have been positive. Right. And so now I want you to see something else here. Let's change. Let's say that it's a 1 to 3. Right. And let me do it like this. It'll be easier. Let's say this. If I change this to a 1 to 3, leave the win rate the same, but every time you won, it was $300. Now you're up. Right? And you're still operating at a win rate of 30%, and you're up. Right? And so I wanted to show you this for risk reward, is that if you are just set your trade idea and control the risk to reward, your win rate isn't going to really be that important. Your ability to keep the 1 to 3 or 1 to 2 is going to be important. Now, let me do this vice versa. Let's say that I take out my trades too early, and my winners, I'm only winning like $50. My losers, I'm losing like 100. What that will do with that same win rate is that I'm down 550. That's the importance of risk to reward. All right. So now most of the time when we trade, we're operating here. I'll pull it up for you. Let me pull it up. I'll show you. We track our statistics in the group on what we call. So I'll pull it up for everybody. All right. Here it is. All right, so right now, this is our stats in the community. Right now, we're operating right around 68% win rate within the community. And so if you look at 68%, what that does on a 1 to 2, that means, let's just say it's 6. It's between 6 and 7. You can't do half. So let's just say we won 6 trades.
What you do with that hair? Did you don't you keep it separate? Okay, good.
So that's what we currently do in the group, is that with the 1 to 2, we're a little over 60%. We're at 67, but that's what we do, is that if you have a 1 to 2, you're going to have account growth with our trading style. And so what that means is that 68%, if you're operating at a 1 to 2, your account would have grown 38% from the time that it started. And this was just tracked through July. So you can see the months where it was, we're averaging around 67% win rate, and then it goes to 75. There's been some months where we're at 100%, 83%, 100%. I think we had a bad month. No bad months. We didn't make any calls this week. This is week to week. We're at 100%. Yeah, this was at 50% went on that one. Then 100%, then 0. And so we track our stats on this on how we're doing with the calls. But if you can manage a minimum of 1 to 2 on your trade idea, your accounts are going to grow. Doesn't matter if you're good or anything, your accounts will grow if you can manage a minimum of 1 to 2.